Morning. What would you do with banks at this point in time? Because that's a sector that has been quite resilient up until now, and the earnings season also proved to be quite good for the entire banking lot. Would you support that sector and think that from here on there would be an up move both with PSUs and private?
So we have to de-link with what's going on with the rest of the world and look at banks in India. I think the credit growth for some time has been somewhat muted. We think that the credit growth will actually pick up once the international money markets become a little tighter and the spreads increase even further from what they are. Therefore, for the near term, it would look like that the business environment is reasonably benign. Interest rates haven't actually moved up very much, and there is a possibility that the credit growth will move up again. That said, I think structurally it is not necessarily a great place to be now anymore because of the simple fact that from here on we expect the yield curve to actually flatten. Remember that the RBI's ability to raise long-term interest rates is still somewhat capped because of the arbitrage that exists between the international rates and the domestic rates. On the other hand, the shorter-term rates have to be something that they have to keep picking up, given the fact that their own borrowing requirements for the government is quite high, as well as for the fact that so that will squeeze out some of the liquidity, plus the fact that we are still struggling with inflation, which is very high. Therefore, they have to show some policy rate increases. So we expect flattening of yield curve, which is usually not necessarily great for the banking sector, because typically the banks make most money when the yield curve is sharp.